You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.CFRN.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.CFRN.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 20th day of February, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you cannot see the screen I have up, go to our homepage at CFRN.net. On the right-hand side, click the big microphone. Follow the instructions. Be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, just point any internet-connected browser to CFRN.net/live. There you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at CFRN. Thanks, CFRN. All right, let's take a look at a chart. Let's pull up the S&P 500 Emini Futures. Here's a daily. Let's Move that out of the way for a moment. And because we put in a slightly higher high, we'll adjust that fib to right there. And remember when we drew this little line across here and said that looked like it would be a pretty good place for the market to find some support at this previous swing high. Important price, important area. And by golly, there it is. Quite a sell-off we had. Came out of nowhere. Market hit an air pocket and dropped like a rock. We have bounced. We're sitting, from this swing low to this swing high. We're right at the 24% fib retracement right here, right now. And I got a little bit of news for you. Let me give you that. The country of Sweden has begun testing an e-krona, bringing it that much closer to the proper release of a central bank digital currency, CBDC. The pilot program will be in operation for 1 year until February of 2021. If and when the e-krona formally launches for use by the public, the idea is that this blockchain-powered currency would drive conventional payments and banking activities throughout the country. Instead of swiping a credit card or spending fiat currency, everyday transactions can move to the blockchain. CBDCs are a hot topic these days, and Sweden is the second country after the Bahamas to unveil what would appear to be a true working national cryptocurrencies. The Bahamas launched a CBDC pilot program in December. Plans a full rollout sometime in the second half of 2020. China has teased that it's developing its own CBDC, but developments there so far aren't as cohesive as Sweden and the Bahamas, and it goes without saying China has some other things on its mind at the moment. Launching a CBDC in Sweden would seem to fit existing Swedish sensibility. The country is already one of the most cashless societies in the world. Let's take a look at the numbers from around the world, the indexes, the cash markets, if you will. Currently, the Dow down 279 points. That's almost 1%. NASDAQ down 133. That's 1.25%. S&P 500 down 31, almost 1%. And the Russell 2000 down 10. In the commodity basket, crude oil up 43 cents, trading 53.72 last. Gold up $12.40, trading 16.2420 last. And the Asian markets at the close, Nikkei posted a gain of 78 points. Shanghai gained 54. The Hang Seng lost 46. And in European markets at the close, the FTSE was down 20. The DAX down 125. The CAC down 48. And for the DAX, that's a drop of almost 1%. So that gives us a mixed day in Asia, red day in the UK, and it's a big red Radio Thursday here in the US of A. Let's go to Michael, get a recap of what happened in the live training room this morning. Today's Thursday, Dr. Tom Day. So I'll reach out to John, remind him, so we get him in early before Dr. Tom shows up at the top of the hour, and we'll be talking about a market that can't be manipulated.
Okay.
And there you go, Michael.
Excellent. All right.
It's all
Let's just
yours.
Okay, I got it. Let's just start here. Okay. Good afternoon, everyone. Today is Thursday, the 20th day of February 2020. 2020. That's what the date is right now. If you have not taken a free trial with us, go to the homepage at CFRN.net, and right here it says free 5-day trial. Click on that, and it will bring you to this page right here, EminiTrainingschool.com, or you can go directly to EminiTrainingschool.com, which I think you have to do right at the moment because Squarespace has given us a problem. So if you go directly to EminiTrainingschool.com, scroll down to where it says 1-week free trial, put in your name, your email, your phone number. Tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. Okay, now let me just go check this one more time. There it is, it's back. Okay, so you can go directly to our homepage. And over here in the right-hand column, 5-day free trial, apply.cfrn.net, or any one of these things, free 5-day trial, proprietary indicators free. And again, that's going to bring it to this page. All right, EminiTrainingschool.com. Okay, now we'll get into what we did or didn't do. Oh wait, I got to show you the spreadsheet. Here it is right here. We had a busy morning this morning. You know, the markets were moving around pretty good. They started out slow, but once they got going, they really got going. See what I mean? 220, 20, 20. That'll never happen again. Today we made 8 ticks in the euro, 28 ticks in gold, and 8 ticks on the ES. If you're going to read the spreadsheet, you can read all the CFTC risk disclosure down at the bottom. Okay, that put us at plus $430 on the morning session. Today it took 80 minutes and 6 trades. That's what I meant by it started out slow, but it picked up. In 6 trades to get to $100 a contract, and we took a total of 9 trades. So those last 3 trades, one of them was 13 ticks in gold, the other was 10 ticks in gold, and the other was 8 ticks on the ES. Those are the last 3 trades. So that puts us at $2,221 on the month. That's over 12 days, averaging 185 per day. And on the year, 5,020. That's over 31 days, averaging 161 per day. 161 per day. Now, let's go take a look at those trades. Okay, because I missed some good ones too, but I snagged a couple of good ones. Yeah, gold really moved around a lot today. We started out right here with break even. Then we had a +1 tick. Then another break even. We missed a trade right here that would have been a break even. We missed a short over here that would have given some profit. It looks like, I think we're going into the high of the day at this point right over here. Then we grabbed 4 ticks right here on this move down, and it just kept going down, 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 down. And then this next one, we grabbed 13 ticks to put us at +18. And this last one, we grabbed 10 ticks to put us at +28. All right, so let's look at what happened during the break. Right in here is where we start getting into what was going on. Right here was a short opportunity during the break. Then it just got really sideways. Really sideways. No other opportunities in there. Okay, so now we're just going to have to wait for it to start trending again and give more opportunities. Now, on the euro, I missed this first trade right here. Well, this was actually, I was doing training this morning in the pre-market, and I used that as an example. So I didn't miss it. I just didn't take it. We did grab this trade right here for 8 ticks, and we missed the follow-up right there because I was filling out my log. And this would have been a break-even momentum short right there had we taken it, and we didn't. And you can see the market just tanked, but it came back up over here giving a long opportunity there, and another one right there. And that was it during the break. Right now, you still have a long right here during the break. Okay, from right in here. And be looking for it to close up above the MA1. All right, and crude was oddly silent today. We did have the crude inventories come out right in here, but before that, in the morning session, there was really not much happening at all. We had one break-even trade here. I said, look for it to get up to this level. It did, and it went through it, and it kept going up, but the cycle was saying not to trade it. Now, if we were doing the 164 trades or the 137s, you would have had a 137 and a 164 combined right here. Okay. Then the inventories came out, it went up, put in a new high on the day, and then it started to sell off. We didn't get any trading opportunities during the sell-off. During the break, even then, we had to break this level right here. And so there would have been one shorting opportunity right there during the break. And one over here during the break. And nothing there. And that would have been it during the whole morning. Okay. Now, the ES. We had just one trade on the ES. Boy, look at this tank. Bang. And we picked up 8 ticks going down to the weekly trading zone right here. And then it started going down, but it wasn't giving us any trade setups. Okay, then it pulled back up. Still no trade setups. Then this is during the break. It started going down again. Again, not giving any trade setups. Not the ones that we do in the room. It did give a 164 right there. It gave a 164 right there. 137 right there. 137. Well, right there. There. But as far as regular trade setups go, it did not give any. Okay, and it just kept going down and down, down, down. Over here, there was a long trade. And here there was a short. Here there was another short. And here was one more. That was all during the break. It's still moving. The market's moving all over the place right now. It's a great time to be trading because we have some good volatility going on. But right here was a long opportunity. Right here, turned around and gave us a shorting opportunity down to the zone. And we have to get away from the zone before we're going to do anything else. That was it. There was a bunch of opportunity this morning. And, you can tell, we picked up $430 a contract in the first 2 hours. And today we picked up 8 ticks in the euro, 28 ticks in gold, and 8 ticks on the ES. Put us at plus $430 a contract on the morning session. And today it took 80 minutes and 6 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 9 trades this morning. So on the month now, we're up $2,221. That's over 12 days, averaging $185 per day. And on the year, we're at $5,020. That's over 31 days, averaging $161 per day. And that is one contract, 2 hours per day. Now, if you have not taken a free trial with us, go to the homepage here at CFRN.net and scroll down to where it says free 5-day trial. You can click on that, use our proprietary indicators free, click on that. Either way, it's going to bring you to this page, EminiTradingSchool.com. On this page, all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. specifically. Okay, hit the send button and you'll be sent a confirmation link. That's when, when you click the confirmation link is when we know that you took the free trial, right? We don't know it when you fill out this form and hit send. We don't know that you took the trial yet. You got to click the confirmation link. All right, and that's it. Then you'll get all the information you need to attend 5 consecutive trading days in our live training room. All right, and with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay, John's not in yet. All right, so we went right back up into the zone here. Now, any of you that have been around for any length of time know that I don't like to trade inside weekly trading zone. I actually prefer to get away from it and then give us some opportunities on the way to the next zone, whether it's up or down. That's what I like to see. Okay.
Okie doke, I'm here.
Okay. Yes.
There we go.
Here it comes. Yep, there it is. There it is.
So I'm guessing you told the folks how to take the free trial.
I did indeed.
Because they need to understand, unless somebody teaches them how to trade, what's going to happen? They're going to fail. It doesn't have to be us, of course, but if you don't find a teacher, if you don't find somebody to show you the ropes, as they say, then these statistics that are up on the screen, 9 out of 10, those aren't my statistics. Those are statistics published in Futures magazine quite a number of years ago, 2006. And the common thread, the thing that connects the 9, is they had nobody to teach them what to do or how to do it. Just as you would not get in an airplane and attempt to fly even across town unless someone had taught you how to pilot an airplane. The same is true of trading. Not to say that you couldn't spend a decade and a couple $100,000 maybe figuring it out. That's one way to go. Or you could become a CFRN passport holder. That gives you at least an opportunity to become the 1 out of 10. And the really good news is you can get started today. No money down, no payments for 6 months. Call Valerie for details at 949-42-EMINI. And here comes the daily chart. Looks like we're heading back towards the lows. That's the daily. And remember the other day we drew this little horizontal line. We thought that would be a good place for the market to potentially find support. It did. It caught a bounce. Right below there is the 38% fib retracement of just the last leg up on the daily chart. Below that's the 50. Below that is the 62. On a 30-minute chart, this is what today's activity looked like. For a couple days, we banged around inside of this weekly trading zone. Zone, up to the zone, back down to the zone, back up to the zone, down to the zone, up to the zone. And then this morning, what happened? Was there ever any news release that accompanied the sell-off, Michael?
No, the news that came out was actually good news today.
But when this thing started to drop during the 11 o'clock 30-minute candle.
Yeah. Those crude inventories came out at 11. And the crude inventories, they had a build. It was smaller than what was anticipated. It was much smaller than the EPI build yesterday. But, we had natural gas come out better than anticipated. CB leading index came out twice as good as anticipated. Unemployment claims came out as anticipated. The Philly Fed came out 3 times what they anticipated. So all the news that came out today was good.
Well, my instructions last night to all of our traders was pretty brief. Sell the indices and buy crude. Right there. Sell the indices, buy crude. And we can see that the S&P is substantially lower. The Dow, substantially lower. Russell, much lower. NQ, much lower. And crude, much higher. So, anyone who followed this little bit of advice, sell the indices and buy crude, well, I guess this bell's for you. Now, that is the highest weekly trading zone right there for crude. We are on the J contract, 5440/45. That was the high. And the zone below is 5330/35.
My crude number for the week is 5345. 5345.
5345. Okay. That looks like that's probably where this swing low came in. Just about.
Yeah, just about.
5344. Yep, that was that swing low right there. All right. Let's take a look. Oh, the news just came out on Roger Stone. He got 3 years. Wow. I just saw this message from Valerie. When did that happen?
During the break, but it's back. I think it was for me. Oh, no, there it is.
Yeah, it just popped back up.
Yeah, I put one in. It was working this morning during the morning session. And then, that message came up. So I just typed in what I typed in, and then Valerie typed in what it actually said. And then it started working.
And now it's working again. Okay.
Yeah.
Alrighty. Well, that's good news. All right, guys, let's take a look. See John here yet? I just reminded him that it's Dr. Tom Day. So
No, it's not here yet.
okay. All
I'll
right.
keep an eye out.
So $23 total alerts issued, week 81. That's the week we're in right now. 2 never triggered, 1 waiting, 20 actionable alerts, 5 were stopped out. So that's 25% of actionable alerts stopped out on Logic 247. That's the biggest number we've had in a while, but that's just the nature of this market and also the truth about trading. On the Concierge Trade Alerts from last night, if you want to grab a screenshot of those, got them out 6:20 p.m. Eastern last night. So we'll start with the S&P. The S&P, we were looking to be long at or above 33.95. Now here's the opening 30-minute candle, and it was during that 30-minute candle that the alerts went out. And so if you went long 33.95, the swing high was 97.50, so it was good for 2.5 points. On the other side, Consider being short 33.80. That happened right here. Important prices, important areas are almost always tested. Now, because we have a weekly zone at 78.79, I'm surprised I put it that close to, I thought it was, must have been thinking 77.78. So, but here's the first trigger at 33.80, and we made it down to 78, so a couple points. And we trigger again, finding support at the weekly trading zone, which sends us back up to the zone overhead where we find resistance. And this time when the market came down through 33.80, it obviously meant business, because we traveled in one 30-minute candle all the way through this zone from 66 to 78. That's 12 points. And then continued down from 65 to 54. I guess that's 11 points on top of that. And this zone is trying to hold as support. I mean, we spiked it real good. We put in a low down at 39.25. And now we're just marking time here, going sideways. Market making up its mind whether or not this is going to hold. If so, perhaps we catch a rally into the afternoon, back up to the zone overhead at 33.65. The Dow, last night's long was at 29,435. And the swing high was 29,434. So we never quite touched the trigger. Missed it by one tick. The short side did trigger. That would be 29,315. Important prices, important areas, almost always tested. So there's 29,315. And from 315 we dropped to 280. So that's a 35-point drop. Back above the trigger. Another 35-point drop. Back above the trigger. And on this one we dropped from 29,315 down to 28,930. We cruised through this zone, and in one 30-minute candle, took out that entire zone right there. This is what happens when buyers stop buying. Yield bottom drops out. Now the lowest zone for the Dow is down here at 288.55, overhead 291.55. So we're just kind of marking time right here in the middle. The Russell, last night's alert was to consider being long, 1702. Never got there. Or to be short, 1688. And 1688 happened right here. We made a drop to 1686, back above the trigger. Another drop to 1685.60, back above the trigger. And the zone at 79.80, that has held as support. We spiked it real good, but now we're catching a bounce, potentially back up to this trigger overhead. So if we bounce, if the markets rally, we would look for this to be resistance, which would then afford us another opportunity at the downside. That's the Russell. NQ, last night's alert for the NQ, consider being long 97.52. And it looks like that might be the swing high. Nope, we made it to 63. So that's a 10-point move in the NQ at $20 a point, $200 per contract traded. On the short side, consider being short 97.01. And we're going to find that right in here. 97.01. So the first drop took us down to 96.86. Back above the trigger. A couple more short moves, small moves. And now we're at the lowest. Nope, we got one more zone below on the NQ. That's down at 94.60/61. And the NQ looks like that's where it wants to hit. I mean, we caught some support here for a minute, caught a bounce, came back to the zone, bounced again, and now the move looks to be to the downside. So from 97.01, Alexa, 97.01 minus 95.60.
9,701 minus 9,560 equals 141.
Alexa, 141 times 20.
141 times 20 is 2,820.
That's a $2,800 per contract move. That's what the market made available. And to every CFRN trader who was in that move, that bell's for you.
John just popped in.
Did he? Okay. All right. Did you ever give me the recap of the recap?
I did not, but today it took 80 minutes and 6 trades to get to $100 per contract.
That's a good bingo.
Yeah, we took a total of 9 trades. On my last 3 trades, I made 23 ticks in gold and 8 ticks on the ES total. So
Good job.
ended up being a good morning.
Good job, Michael.
Thank you.
John, welcome to the show.
Hi there. What a day, huh?
Yeah.
But don't despair. We're rallying right now. I just got a buy signal literally as I just came on. I think we're going to rally a bit, at least. How much remains to be seen. But, you know, this is probably the scariest sell-off we've had in a while. And you know, every single sell-off so far has come back from the brink. This one's a little bit harder. But not, you know, we went along the VIXs yesterday at the close, thank God, and we've been trading in and out of them this morning quite well, and just actually sold them up at 11.75 a short while ago. I may buy back in if this fails, this rally, but anyhow, looks like it might. You know, this is a very heavy market. You got to keep that in mind. It's kind of really potentially quite dangerous. There was a lot of traps set this morning. You know, you had the transports up looking very strong, and you know, and the mid cap and everything was also very strong, trying to kind of hide the fact that the Nasdaq and the S&P and so on were going to sell off. Typical kind of trap. And, you know, the first sign of weakness, we haven't seen this in a while, but the Nasdaq was kind of underperforming the Dow and the S&P this morning for the first time in a while, and it continues to do so, actually, to a certain extent. The fact that we're down 200 on the NASDAQ, or we were, and we're only down 300 on the Dow, that's a significantly larger sell-off on the NASDAQ. So whether it's the virus or inflation coming into the fore yesterday, or the supply chain situation, whatever it is, it's starting to wake a few people up.
Right.
And so we are a bit of we're in a bit of a tizzy right now, as far as what could still happen today. Also, we've made a double bottom on the VIX, and we've traded higher. We had that doji yesterday, and that was the reason why we took that shot. Now, it didn't work out. It was a little bit tricky because it kind of opened a little bit strong, sold off a bit, went down and tested, and then it took off. Right now they're trying to sort of rally the fangs a little bit, but it's not really. You never know with these. These rallies can come out of nowhere and they can bite you if you're not kind of prepared for them. So, but it does actually look to me now as if the VIXs are going to go higher, and the market probably going to break down, because this, the way it went up this morning after, it almost, don't think it went positive. Maybe it did.
I've got a daily of the VIX up right now.
Yeah, you can see that big breakout. I mean, that's pretty significant. If you can put the UVXY up, you get a better sense. This is the beginning of something pretty unusual. So, now we're getting a little bit more traction starting to come in. This is what's so difficult about these rallies. They can come out of nowhere, and once they get some traction, they can knock the VIXs down. But on a day like today, I think that on a day like today, the premium, they've been knocking the VIXs down and really kind of maybe manipulating them to get more of a rally in the market. And when you get a very big run like this, as we're starting to get off this bottom, they can, people start to pay attention to them, and so the premium, you get a bit of premium in there, just like the dust and the gold. When there's a lot of premium in the nugget right now. Although today the dust rallied, then they knocked the gold down. Although the gold's still up 9 rather. The silver got hit. Anytime the silver's going down, you got to be real careful with the gold. So we're getting a little bit more traction now. So I think this buy signal is trying to exert some upside, and the VIXs are poised. If they knock the VIXs down as they're trying to do right now, they're probably going to get a stronger rally, which is starting to happen. So. A couple of very interesting stuff. Put up Copart, CPRT. Can you go to probably a 5, maybe even a 3-minute chart on that one?
Okay, there we go.
Yeah, what an incredible day for this stock. A very, very good trading opportunity type of day. If you were brave enough to short the open, you could have made a lot of money. About $6 or something, and then if you went long, look at the rebound. It's a little bit like that one we talked about a while back, FIVE, which actually wouldn't be a bad idea to take a look at that stock. Excuse me. Yeah, that's been a pretty interesting trader. You remember, if you can put a bit more history on that, maybe a 45-min or an hourly.
There's 45 minutes.
Yeah, maybe 100, maybe a 4-hour chart.
Okay.
Yeah. So maybe a 4-hour chart. Yeah, remember that one, very similar to Copart, except slightly different because it didn't go down. It just went straight up from the open. Okay, we're actually starting to rally more strongly, and this is a potential point at which we could possibly accelerate higher as some of these stocks stabilize. You know, it's a bit of a tall order for this market to recover today, but I wouldn't, you know, stranger things have happened. And they have knocked the gold down, which is kind of a little bit bullish for the rebound. However, when you look at the oh boy, you look at the hourlies, they look kind of really dangerous. So you have to be ready to get back in those VIXs if this thing shows signs of breaking down. A couple of another in a very interesting stock, ENPH. I kind of very much regret not buying this stock on the open yesterday.
What is it? What's the symbol again, John?
ENPH. I actually saw this stock. This thing's gone from like about 70 cents to the current price. I remember this thing when it was just getting going, and you should see the numbers on this thing. They're just incredible. I mean, I just, you know, this is so important to do your due diligence. If I'd been a bit, you know, I kind of like, when I saw it up after hours, it was like up to $2 or $3. I didn't pay too much attention to it. I really should have, because you know, only somebody brain dead would not have bought that thing on the open yesterday, given the numbers. It just steps. There was some kind of huge tax benefit, and just unbelievable. So this thing went up, and I got a buy signal on this morning, and it's, you know, it's, in other words, in spite of the pressure of the market, the stocks, you know, acting real well. Also, Roku continued to go lower, although it's turned around, and it's actually kind of led the market a bit. You know, it's one of the first stocks to rebound this morning. See that little up move here? Could be, you know, if the market goes back higher, that could be the end of Roku's decline for the time being. And interesting, you know, let's just take a look at Microsoft, MSFT. You know, yesterday that sell right on the was it yesterday? Sorry, no, the all-time high, and then this sort of sideways, and then yeah, see that red bar yesterday? You know, just on the open. That's actually what kind of gave me the clue the market might be in trouble.
Yesterday.
Just to the right a bit, to the right, to your right.
This
more. There, that one there, that really kind of set the market potentially for this damage. And if you look at Microsoft on a daily, if you can go to a daily, you'll see that it actually is giving off a, you know, no, it's giving off a sell signal. However, we've seen this movie before. It's sort of like a three-wave pullback. So this could be the beginning of a recovery of some kind of like substance. And look at the rally that's going on since I put out the buy signal a minute ago, you know, when I first came on. It's already starting to get some traction. So the VIXs are getting knocked down, thank God. So glad we got out. You know, these VIXs can be vicious. They're very difficult to trade, to be honest with you. The other thing is like FedEx and Boeing, and the transports. You know, United Airlines crazy up again. You know, Boeing could be poised for further upside. It seems to be going up on bad news these days. Take a look at UAL. Oh, look, well, it got, you know, it went crazy, and then they said, I did actually get a sell signal on UAL this morning, but I was kind of looking at it, you know, being up like $2 or so, and I was scratching my head. And then FedEx is very strong, FDX.
Here we go.
Just amazing. I mean, listen, this stock came out with bad news, a gap down. I mean, look at the way this thing's been performing. It's just amazing. This rally, I mean, look, if we get out of this hole today and this turn and we go all the way back up like we've been doing before, I mean, we're going to go crazy higher. I mean, in the next few days, assuming we recover from this, because this is, the market kind of ran into a bit of trouble, and very often what happens, it kind of reminds me of the Dow, when it was trying to get through 10,000 back in 99, or 2000, whenever it was. It kind of went up to 97, 9800, and everybody on CNBC is wearing Dow 10,000 caps and things. And the next thing you know, it backs off because there was just too much talk about it, and it actually backed up, sort of back to 9200 or something like that, and then it got the energy to go up, and when it did get the energy, it went all the way to 11,000. We're probably in the same kind of boat here on this market, where we're at 29,000 today, which is the equivalent of being at 9,700. So we backed off a bit, but is this the beginning of the weakness in the NASDAQ and the strength in the Dow, where the Dow becomes the leader and potentially gets over 30,000 or higher? Look, the other side of the coin is the highs could be in. I mean, this is just fantasy talk right now. The highs could be in. There's a lot of sort of things lining up here, including that outside day.
Yeah, I was just going to say, to have a look at this outside day here on the S&P.
Yeah, no, I mean, that's really bad. Well, look what happened before. We had an outside day the last time and we ended up going higher. So,
this outside day right here took us lower.
Yeah.
So this one, well, look, it very much depends on, if we don't, and look, these bottoms, I mean, that bottom that when we sold off into 4 o'clock bottom, 2, 3 or 4 o'clock bottom a few days ago, I mean, the rally we got off that was pretty spectacular, and we're kind of set up for the same thing again. That's the whole thing. When you get these powerful looking bottoms, they can kind of feed on themselves and just like end up, being a bottom, and they tend to push the price higher. Today is and look, that thing I was telling you about where it looked a bit bad on the hourly, now the hourly is looking pretty good. So, and in fact, there was a doji. The last hour was a doji. So that was a bit of a clue that we, it kind of felt that the market wasn't kind of, what's the word, wasn't facilitating trade. It wasn't, we were kind of going back and forth trying to figure out whether we're going to continue lower or whether we're going to go higher. And so far, we've gone a bit higher. So now, but remember, we've seen this movie before, because oftentimes you and I have been talking around about this time, and then all of a sudden, it keels over and we're in another sell-off, and the VIXs are starting to give another buy signal here. So we have to be very, very cautious, because this is look, how long ago is it? And we haven't, it's probably a year since we went down 200 on the NASDAQ in one day. We're only down 158 now, but right.
We're down 200 pretty quick. Very, very fast.
Yeah.
And it was
it happened. Most of it happened over the course of an hour. Here's 2 30-minute candles.
Yeah, and there was a definite element of panic, in this sell-off for sure. So it's now this favorite trick is what's happening right now is the market pulls back a bit, so it scares everybody, and then sometimes in the past on these very strong days, we gone back up again, and that's the hard part. It's very hard to trade these things when because going short, and then if you get caught, you get hurt. So you just have to give it a little bit more time. And obviously your chart that you've got up there is a little bit threatening at the moment, but obviously if we do trade higher, it strengthens the case for a bigger recovery. But this is a pretty big deal today, because the thing that makes this today really dangerous is when you look at the fangs and you look at the dailies, you could argue, yesterday afternoon, it looked very telling, if you like, that potentially the highs were in, last night. And I actually picked that exact top of the market last night. I happened to come in as it was happening, and the way it sold off was pretty alarming, frankly. And I was trying to figure out what made it happen. I don't know whether it was around that time that they reported the 2 deaths on the Diamond Princess. God rest their souls. And all the other people who are afflicted on that ship. It must be very, very, having lived on a ship myself, Pacific Princess and others, I just feel for all those people, because
they've been through
there's
so
only
much.
There's only one doctor on the ship. Give me a break. It's really it.
We do have a doctor in the house, though. Welcome, Dr. Tom.
Oh, well, I'm not a medical doctor, but I did stay at a Holiday Inn Express.
Okay.
That's a good one. Well, hi, doctor. Well, look at the gold. Is this awesome or what? What's going on here?
Yeah, gracious. I know yesterday you hit 1612 or something. What did it hit today?
Swing high 1626.50 on the futures. But let me just go to straight up gold. And today we got a high at 1623.74.
Well, that is sweet. That is sweet.
So we've taken out that spike that we got over that Iran-Iraq business. The night we caught that spike, we've now taken. If we can close above that, that is indeed very bullish.
Yeah, we're kind of vulnerable to a pullback, and especially given what's going on today with the market. The gold stocks have topped temporarily, at least this morning, and that could be a sign that we're going to drop down. But I think tomorrow is going to be an interesting day, because I think if the gold finishes strong tomorrow, it's probably going to continue higher next week. Possibly very dramatically higher. Now look at this rally. Is this awesome or what?
Last night's alert to all of our traders was to be long gold 1618. So from 1618 to 26, that's a $800 per contract move. And now we're pulling back to the trigger, back to the BBC, and as long as that pullback holds right there, then we look for another leg to the upside.
You're saying you're smart then, Dwayne, right?
I'm sorry?
You're saying you're smart then.
Well, I don't know about that, but I'll take it if it's a compliment. I mean, sure.
Yeah, well, I mean, you called it. People made money, so you're smart.
Well, that's very kind of you. Thanks.
Yeah.
That's what we do. We just try to give the best information that we can based upon whatever the market's trying to do. We have no control over it. Kind of like a puzzle. You sit down every day and you figure out what is the market and all of the market participants, what are they trying to do? Are they trying to move higher to the zone overhead, or are they trying to move lower to the zone below? And then it's just, get a ticket, get on board, and go with the flow.
Yeah, so we're getting a fairly stout rally here after all, and it certainly improves the potential outlook for this thing, but remains to be seen whether we can. There have been days before where we've been down 200 and we've come back to down 100 or even less than that. So
I'm going to step away just for a second, okay?
Okay, all right, Dr. Tom, we'll be here.
Yeah, Dwayne, look, the VIXs are getting hammered now, and so look at now a couple of the end phase gave us a buy back at 56.20, and it's already rallied up to just 56.90 or somewhere like that. All these stocks that we looked at a while ago are going higher now, Boeing, FedEx. So this market hasn't lost its mojo completely. And the Roku, which we looked at a short while ago, actually is kind of leading the market higher today, which is rather unusual, considering it's been hit pretty hard the last few days. So what I can say is my work is kind of has been calling these things pretty well, and I'm very very pleased about that, especially in such extreme conditions. And actually, take a look at BABA, because BABA got hammered early this morning, and it kind of led the market down because they do trade off the Chinese stocks as well. But it's coming. It's coming back now. It doesn't look very good technically. Obviously, the stock, if it breaks any lower, it could be in for a big fall. But it's already coming off the lows. So we're kind of certainly. It just shows. I mean, the big institutions are probably saying thank you very much for the day. And remember we talked about Tesla last night? I think that was a pretty good call. On that doji. So again, the fact that we're coming off now this low quite impressively, it probably means that this unless we roll over later on today, probably means that we're going to take another shot at the highs on Tesla, maybe even run up to 1200. And look, the other thing with this fix, if you can put up the UVs maybe on a 60-minute or 30-minute, perhaps.
UV, what is
XY.
it? XY.
Right. What they love to do with this thing, if you go to, let's say, 30 minutes, let's say. Yeah, you probably can't see maybe the hourly, but when you get, look what happened before. You see how they, we had look at this day.
There's the hourly.
A while back. If you could go back to the 30s again. Yeah, that's a complete hourly reversal. So that's a pretty big deal.
Yeah.
If you could go back to the 30, Dwayne.
Back to the 30. Here we go.
Okay, you see this where it says year to date, 06 February 20. See that? See, that's the last time the VIX has gapped up and then sold off, and look at where we ended up going. So this actually is quite bullish for the market. The fact that they've knocked this thing down as quick as they had. Now, it might have a 50% retracement of this gain today, and then this thing might go up and make another shot at the highs. So that's sort of like a point to watch down around maybe $11 area, something like that. But no, this is look, we've cut the losses. We've gone up another 30 points or so on the NASDAQ as we've been talking. So that's a $600. It's actually, well, from where we went, we've gone up 50 points really since I came on. So it's quite remarkable. And Apple and Microsoft and all these are starting to look better already.
Okay, I'm back with you guys. Sorry.
All right, great. All right, Dr. Tom, I'll send the screens over to you. John, anything You want to wrap
No,
it
no,
up?
listen, thanks very much for the invite, and good luck to everybody for the rest of the day, and have a great afternoon. Thanks.
Thanks, John.
You too, John.
Have a good day.
You too.
Okay, Dr. Tom, there comes the screen.
Yes, sir. Sorry, I've never done that before, just walking away. But
No, it's okay. We're casual.
I know. That was the president of the university I teach for. We've been trying to reach him, so I figured I better grab him while I can.
That's kind of like trying to get a hold of you.
I'm not that bad.
Yeah.
Okay, here we go. Ready to rock and roll.
It's not showing up. I can't see the full slide.
You
It's like
cannot.
it's like it's in a minimized format or something.
Can you see the market that cannot be manipulated in the,
I can
in
see.
the little?
I see the MAR, and then below that I see CANN, and then below that I see Manip. It's just like
Okay.
part of it's not showing up.
I think I know why. Let me try this.
Okay, I can see the whole. Oh, perfect. You got it.
Okay.
You nailed it.
Yeah, what it was, I had two things side by side, so I was only using half the screen. But usually when you go full screen, it, takes care of itself. But
Gotcha.
anyway, well, you are familiar with market manipulations, all right?
Absolutely. We see it in
You probably
in equities, in typically the micro caps, stocks under $5. Lots of manipulation goes on there, and even the gold and silver markets are manipulated to a degree, I believe.
absolutely. Well, we're going to be talking about the Hunt brothers, and that's the the biggest example of silver just being totally manipulated, and it was all done with paper. It wasn't real silver. So, but it certainly affected the price. So, I want to talk to y'all today about one type of market that can't be manipulated. Virtually everything else can, if you have enough money and enough determination. But nobody can manipulate the collectibles market. So let's just look at a few collectibles. This was what I thought was kind of interesting. You open up a drawer, cleaning out your house, and you find a bunch of old baseball cards. That's what this lady did after her husband died. And so most people would have thrown them out, but she went and had them evaluated, and they were worth over $1 million.
Wow.
Okay. Yeah. So I always say, buyer beware. Whenever you get in the financial market, you really need to study it. That's why it's so important that people take the kind of training that you offer. I mean, think of all the people that have just jumped into trying to trade futures because they read a book or went to one of these $3,000 weekend seminars that told them they become experts. And
I think there's 7,000 now.
7,000, good Lord. So, I mean, this cartoon here says it all. Nice doggy dice. Don't rip me up the rest of the way. You've already torn me and ripped me, and I'm bleeding all over the place. But you cannot placate the markets. They have no mercy, and they will crush you if you're not aware. So it can be hard to understand the markets. I mean, this chart basically shows the flow of money and goods and services, both domestically and foreign. And what we think of as fairly simple is actually quite complex behind the scenes. But if you don't understand the behind the scenes, you really can't understand the simple. Does that make sense?
Mm-hmm. It does.
People think, well, I'll just buy 100 shares of stock, and if it goes up, they go up, and if they don't, they don't. But there's a lot more to it than that, of course. So let's talk about market manipulation. probably don't need to define it, but it's a deliberate attempt to interfere with free and fair operation of a market and create artificial, false, or misleading appearances about the price of or the market for a security, currency, or commodity. It has happened tens of thousands of times, maybe, who knows, millions of times, because you don't always know when a market's being manipulated. So a little history of manipulation. See how the poor guy over there, he's being suckered in like, oh, look,
Yep.
here's money.
Yep.
And then see the other guy falling down?
Yep.
That's what happens. So market manipulation has a long and sordid history, going all the way from the tulip mania of the 1600s to the recent housing bubble to, as far as I'm concerned, the current stock market bubble we're in. I don't think this is just a high. I think we're actually in a bubble. Market manipulators have used many types of strategies to target investors. Even though market manipulation is prohibited by federal law, it's still widespread. Everybody from high-ranking government officials to investment bankers have been caught with their hands in the cookie jar. I mean, try to think of any senator or congressman who basically was maybe a middle-class guy or upper middle class who didn't come home after serving his time in Congress a millionaire. Hard to find him.
Yep, sure is.
So here's some markets that have been manipulated that we know of or that are currently being manipulated. Stocks, options, mutual funds, bonds, commodities, energy, mortgage-backed securities, CDOs, currencies, real estate, and even, as you mentioned earlier, bullion, gold and silver bullion. All have been manipulated, and most are currently being manipulated. And the thing is, you don't know whether your particular market is being manipulated or not.
Right. Right.
So, we've all heard of pump and dump. I won't spend too much time on this because anybody who's ever been involved in stocks knows what it's about. But basically, it's the artificial manipulation of a stock's price. So you make profits. You buy them cheap, you pump them, and then you dump them. So it's illegal. It can lead to heavy fines. Actually, you can go to prison for it, especially if a lot of people lose a lot of money.
Interestingly enough, not only did Mark Cuban not go to prison for it, he might someday be a sitting president.
And he did pump and dump on what?
That's kind of, well, it's how he turned the money he scammed out of Yahoo for that broken down broadcast.com. It's what he did with his money. He was heavily involved in naked short selling, and I was at the table with AG Media. It was a Christian media company, and
wow.
Thanks, Mark.
I did not know about that. And you're right. He doesn't need to be on Shark Tank, but he just wants to be out in the public every week and shown as making good deals and so on, because the guy's got so much money. I think the only thing he's probably on his bucket list that he hasn't achieved is becoming president. So we'll see if Michael Bloomberg is able to buy the Democratic nomination. My daughter calls his campaign the Doomberg campaign.
That's a good one.
Doom.
Even if he can buy the nomination, I don't think he can buy the presidency.
No, that's not going to happen. I mean, the guy has all of the charisma and charm of a dead goldfish. He is not going to prevail against Trump, even if he gets the Democrat nomination. At least Bernie Sanders has got some fire and some enthusiasm. But this guy, all he's got is money and a big ego. He will never be president. Thank the Lord. Anyway, it's illegal, and the victims usually lose all or a big portion of their investment because it usually goes back to its original price or even lower after they finish with the scam. So just in case anybody has criminal intentions and wants to engage in pump and dump, I thought I'd just give a little quick tutorial on how to do it. You take a large position in a company stock before starting to pump it up, boost the price of the stock through recommendations based on false, misleading, or greatly exaggerated claims, dump the stock, sell your positions after the price gets up as high as you want, and then repeat steps 1, 2, and 3. So I don't advise it. I just thought, let you know how it actually happens. And there's people that do this over and over and over again. So
Yep, it's an industry.
it really is. In the past, most people don't remember this, but they had telephone boiler rooms,
Oh yeah.
and these guys would cold call. But now, since Al Gore invented the internet, pump and dump has gained a whole new life. And
Plus, people don't answer their phones as much anymore.
yeah, because you can see who's calling you beforehand.
Well, my phone sometimes says telemarketer. Sometimes it says possible spam, I think.
Really?
Yeah.
Okay.
That's what I
Usually I'll get block call, and I figure, okay, if they're blocking the number, I don't want to talk to them. But usually on the internet now, they're targeting micro and small cap stocks. They're easy to manipulate, first because of their price, but also because the float is small. So it only takes a few buyers to pump a stock up. So anybody that claims on the internet that a stock is about to break out, take that with a very large grain of salt. Matter of fact, you might even want to take it with a whole salt shaker.
Yeah, right.
Because if you listen to these gurus on these chats and so on, you're just asking to be ripped off.
You'll be fleeced over and over and over. In fact, if it's happened to you once, chances are it's happened to you twice.
It's true. I had this friend that he just falls for every single scam that comes along. And I finally made him promise. He's in another state. I said, raise your right hand. Okay. Repeat after me. I will never invest in anything else without calling Tom first. Because he just
very good.
Everything he did was just a disaster. So I thought this is pretty good. This is an interview with Kramer calls himself a stock guru.
I used to
really
have a
think-
video of that interview on my website, and shame on me for not downloading the video and then uploading it to my site. I made the mistake of just linking to it because CNBC since has had Google take it down.
Oh, darn.
Although it may have popped back up again. It's possible. But yeah, go
Well,
ahead.
a lot of times people will grab those and put them up on YouTube or something. So
Well, that's
Yeah,
what it was.
it-
I linked to it on YouTube instead of, I should have downloaded it, put it on my server, and then uploaded it to my website. That way they couldn't take it away from me, but anyway, I didn't. So, but those who were around when we launched CFRN back in 2005, you guys will remember this. And in fact, Kramer was subpoenaed on camera, and I forget what he wrote. I think there might have been an F in it, and he shoved it at the camera, and showed up for work the next day. He refused to even respond to the subpoena. But anyway, that's old news.
wow. Well, in that interview, if you remember, he talked about strategies used by hedge fund managers, that some were questionable legally and others were clearly illegal. But he admitted that he regularly manipulated the market when he ran his hedge fund. He called it a fun and lucrative game. Okay. Never have had any respect for this guy, but after I saw the interview, whatever little shred of respect was gone. He was a master manipulator. He talked about how he could push stocks higher and lower with as little as $5 million in capital. And when you're running a hedge fund, $5 million is not a lot of money.
Yeah,
Do you
know how he found the companies? Do you know how he chose, or one of the methods that he used to do this? He would call microcap companies, and when he came across one where the CEO himself answered the phone, that's the ones he would go after.
If it was that small, Then he figured, okay, it's worth my time.
I can manipulate this. Yep, exactly.
So this is a direct quote from him from the video. A lot of times when I was short of my hedge fund, meaning I needed the stock to go down, I would create a level of activity beforehand that would drive the futures. And he also openly encouraged other hedge fund managers to engage in this kind of illegal activity because it's a very quick way to make money. So it's fun and profitable, according to Kramer. Sweet guy. Now here's something going back a ways, 1867. That was about when I was born. There was a financier and railroad builder named Jay Gould, who was on the board of the directors of the Erie Railroad. In what became known as the Erie War, he fought to keep Magnet, like a Russian oligarch named Cornelius Vanderbilt, from acquiring Erie and consolidating the industry. Vanderbilt wanted to just put it all into one great big railroad line. So he issued 100,000 shares of new Erie stock illegally by converting debentures. Then he knew it was illegal, right? Then he used the money he got from the 100,000 shares to bribe New York legislators to make the illegal act legal. Vanderbilt was outfoxed, and so he settled and he got $1 million payout. But Gould made a lot more net by selling his railroad. Finally, he sold the stock short. Okay. For those that don't know what that means, he was basically betting against his own company, and so that if the stock went down, every time it went down, he made more money, and he made a killing on that, and then he bankrupted it in 1875. So from 1867 to 1875, in 8 years, he made millions and millions of dollars illegally, and then he bankrupted a major railroad, and thousands of people lost their jobs. Sweet guy. Okay, everybody's heard of Enron. Ken Lay, back in '85, lobbied Congress to deregulate natural gas, and that he merged two gas companies. He began trading these markets. This is sort of like, you remember Pete Rose?
Mm-hmm. Baseball guy.
He was actually a client of mine when I was a stockbroker.
Wow.
And yeah, I mean, he's playing baseball, he's coaching, whatever he was doing at the time, but he's also betting on it on the side, which they were not allowed to do. So that's why he was taken out of the Baseball Hall of Fame and banned from the game. Wasn't even allowed to attend baseball games. Well, this is kind of like what Enron did. They began trading their markets on the side, probably using proxies. And Ken Lay and the CEO named Jeff Skilling used accounting loopholes to keep billions of dollars in debt. So they're borrowing money like crazy, but on their books they look good. And their biggest con of all was pressuring Arthur Andersen and company to help them fool the board of directors and the audit committee. Now, you remember Arthur Andersen, right?
Yes, I do.
One of the big 5 accounting firms in the world. And how he conned them. I mean, these were very knowledgeable CPAs worth billions of dollars, and it ruined them. When Enron melted down, I love that little graphic there. The investors lost more than $70 billion. It was the biggest bankruptcy in history up to that time. The stock went from $90 in mid-2000 to less than $1 by November 2001, and collateral damage. Arthur Andersen company lost most of its customers and had to shut down. All because of 2 greedy guys. Now, this was a really interesting one. I hadn't heard about this till I started researching this PowerPoint. two Arab students at UCLA figured that they could make a lot of money on the internet. So they bought up tons of this little tiny printing company that nobody had ever heard of. And it was actually bankrupt. Okay. So they got it for 13 cents. And in 2 trading days, they drove it up to more than $15. So that just kind of shows how the internet has transformed the old game of stock market manipulation. But it wasn't just 2 trading days, it was actually 30 minutes. They first spent 2 weeks acquiring 97% of the stock in the web world. And after the market closed on Friday, they sent out hundreds of messages in their bulletin boards, falsely claiming there's going to be a takeover and huge profits coming. So that's when they did all the promotion, just over those 2 days. But on Monday, based on orders made by traders who were trying to get ahead of it, right? They believed the fake postings. The stock rose 106,600% to $15.50 a share in just 30 minutes. 30 minutes. That was the real run of this thing. The 2 days they mentioned earlier was the days, the weekend where they pumped it up. So they sold their shares into the buying frenzy and made over $350,000. Now the shares did close a little higher than they had been. They started at 13 cents, went to 15.50. They closed at 75 cents, but then eventually went to nothing. So both those guys are in prison now, by the way. Good for them. Okay, have you ever heard of tulpenwoud?
No, I haven't heard that word.
Well, that is Dutch for tulip mania. And we've all heard of the tulip mania, right? It's one of the most famous stock market or famous market bubbles of all time. And it was really ridiculous. People started speculating on the value of tulip bulbs. That's their most popular flower there. And if you've ever been to Holland, you'll see whole acres covered in tulips, and they make beautiful designs, artwork in tulips with different colors. But at the height of the market, tulip bulbs were selling for as much as 6 times the average person's salary. Now, before, they sold for about the equivalent of today of $1 a piece. So that's just to put it in perspective. There was one really rare one. Oh, we'll get to that in a second. But if you look at the chart there, you can see in, what's that, 1634, and you see it go up in 3 years from 1 guilder to 60 guilders. And then everything fell apart and you see the straight down drop. Okay. The tulip was brought to Europe from the Ottoman Empire, and the upper class people started competing for the rarest bulbs. It became a status symbol. But then they actually started trading them on the stock exchanges. You believe that?
It's hard to believe, but it is history.
So all members of society started to speculate. I mean, there were dishwashers and ditch diggers that were speculating on tulips and making tons of money. People traded or sold their possessions. Some people sold their houses to buy tulip bulbs at the height of the mania. But at the beginning of 1637, some of these tulip contracts reached a level 20 times the level of 3 months earlier, and that's when it started to fall apart. Here's a particularly rare one called Semper Augustus. It was priced at 5,500 guilders per bulb. That's roughly the cost of a luxurious house in Amsterdam.
Wow.
Just before the crash. But like any bubble, it all came to an end, and prices dropped and panic selling began, and bulbs were soon trading at a fraction of what they once had, leaving many families and individuals in financial ruin. Now, here's a real sweet guy. George Soros, he actually broke the Bank of England single-handedly by shorting the pound.
He did, yeah.
And I like this quote. He actually said this. Well, you know, I was a human being before I became a businessman. I don't know what he was trying to say, but I know what it says to me.
Yeah.
You know, everybody in Thailand and Britain, Malaysia, hates him, despises him even, because he made billions of dollars breaking currencies. But the real sad thing about the British one was on Black Wednesday, when he kind of let everything loose and the pound crashed, he made over $1 billion in profits by short selling the pound. But here's the sad part. The Treasury had to spend $27 billion to prop up the currency. So they spent 27 billion pounds protecting themselves, and he made $1 billion. That's just so wrong. You know? Now he's backing presidential candidates. Okay, the Hunt brothers. H.L. Hunt, we don't know too much about him. But when he died in 1974, he left billions of dollars for to his family. Two of his sons, Herbert and Nelson, put their oil money, Hunt was an oil man, into the commodities market. They were big believers in silver, so instead of settling their futures contracts in cash, they took physical delivery. So they ended up with warehouses of silver.
Mm-hmm. Right.
Silver went from, you know, a buck or two up to $50, and they were stockpiling the silver and using their cash reserves to buy up even more futures. These billions of dollars in demand triggered the rise of silver to unheard of prices. It's been $50 since then, but now, of course, it's back down to around 17. So $1 billion worth of silver purchases was bound to move the market. But the Hunts increased this by leveraging their family fortune. And the Hunt name was gold. The Hunts could get all the money they wanted to at much lower rates than other speculators. There are other people trying to speculate on silver as well, but I mean, they were the big dog. So they had reduced the amount of silver that's available in the public market, and this made their continued buying all the more powerful by pushing up the price. So at that point, their position was worth $4.5 billion. People were pawning coins and silverware, like the people did to buy the tulip bulbs. But the brothers controlled over 2/3 of the silver market. Now, you know how silver usually follows gold?
Correct.
They typically move in sympathy with one another.
Right.
But it's typically gold going up and silver trailing. In this case, silver was being manipulated to such an extent that gold rose to $800. It had only been about $300 before that. So by mid-1980, which, by the way, that was when I sold my gold. It was because I was really smart. I was just scared. I bought $250,000 worth of gold at $200 an ounce several decades earlier and just sat on it. And this is the first time I really understood what inflation was, because my $250,000 at 200 was now $1 million at 800 an ounce. So for the first time, I could call myself a millionaire.
Wow.
But I didn't realize that the only reason that gold had gone up so much was artificial. Okay. And the $1 million wouldn't buy me any more than the $250,000 bought me when I first bought it. So in reality, I made nothing. Okay. Because even though I had 4 times as many dollars, the dollars were worth so much less. And then, of course, silver broke, and then gold broke, and gold went back down to 300, and silver went down even worse. So anyway, they were controlling 2/3 of the silver market. The government became concerned over the manipulation of the silver reserves. The Hunt brothers actually had more silver than the U.S. government did. Okay, and also the Saudi royalty was buying into it, and they were afraid of international relations being badly hurt. So the commodities regulator wrote special rules. I don't think this has ever happened before in history, but they prevented any long position contracts. Nobody could write a contract or sell a long contract. So basically, they're suspending the fundamental rules of the market. With longs frozen and shorts free to pile in, silver began to slide. Margin calls took the toll on the Hunts to the point where they were paying millions of dollars a day in margin calls. When it became clear that the government was after the Hunt scalps, their credit dried up. I mean, these people that could get credit anytime for anything now couldn't, borrow enough money to buy a car. People were concerned that they're not going to be able to meet their margins, but Dulos would go under, and pulling several brokerages and banks with them put more pressure on silver. So on March 27, 1980, the Hunt brothers for the first time missed a margin call, and the market plunged, and silver dropped from $50 down to less than 11. These are the Hunt brothers testifying before Congress. So we talked about a lot of different things that can be, have been, and are being manipulated. What about something that can't be manipulated? Collectibles. Now, you've heard me mention this before, but during the Great Depression, the only asset class that went up was collectibles. Everything else, stocks, bonds, real estate, you name it, dropped dramatically in value. But you can't pump and dump collectibles, because in order to do that, you have to have large quantities. Well, by definition, collectibles are available only in very small quantities. Sometimes they're one of a kind. We'll talk about a couple of those. But very often there's less than a dozen or a few hundred in the world. They can't be shorted. There's no mechanism to short collectibles. They can't be optioned, so people can't use leverage to buy them. They can't be manufactured. Right. The Chinese are manufacturing just about anything you can imagine, cheap junk, and so on. And they're even manufacturing gold bullion, okay, like American Eagles. They're making American Eagles in China. They're making them out of tungsten, and then they coat them with gold, and a lot of experts are fooled.
Really?
Oh yeah. If you don't know the person you're buying gold bullion from, don't buy gold bullion from them. But the only way you could really tell, you can't use the acid test on fake bullion because it's a destructive test, right?
Right.
So they're making them out of tungsten, which has the same atomic weight, or almost exactly as gold. So when you put them on a scale, they check out. The only real way to tell that these pink ladies here are making fakes is to drill a hole into it. And if it comes out gray metal, then you know you had a fake. So be very, very careful who you buy your bullion from, if you buy bullion. Okay, they can't be IPO'd. Never going to happen. Again, not enough. But the main thing is they can't be manipulated. Thank the Lord that there's something that can't be manipulated. There are no arbitrageurs, wild speculators, no day traders among collectors. If someone buys and sells a fine collectible, the negotiation can take weeks or months or even years before the deal's already done. So there's no snap trading. It's impossible to crash the collectibles market by flooding with too much supply, because the supply isn't there. By definition, collectibles are extremely rare. Okay. Now, you remember those Elvis paintings that they used to have at gas stations? selling one corner gas stations
Mm-hmm.
on black velvet. You can flood that market, and make them go from $20 down to $2 because it's easy to make them, but you can't do it with collectibles. So it's a market that's dominated by the very wealthy. But fortunately for us, there have been changes in the way the market's done that make it possible for regular people to buy collectibles as well. And there's all kinds of them. The markets are very sophisticated. These are all, price guides for various different kinds of collectibles. Who ever heard of collecting a duck decoy? Antiques, yes. There's a price guide for comic books. I mean, I knew people traded comic books, but I didn't realize how big and how sophisticated the market is.
Right.
There's whole conventions for comic books.
Comic-Con
Baseball cards.
Mm-hmm.
Oh, yeah. Absolutely. Duck decoys. I met a pastor, and we were having lunch together at a minister's convention, and I was telling him about what I did with the rare coins. And he says, yeah, I understand that. I get rarity and high condition because I collect duck decoys. I said, you what? He said, yeah. And he told me a story about he'd gone to a convention with a friend, and he told the friend what he was looking for in a duck decoy. And so they were going their separate ways, and his friend comes over, yeah, I think I found what you need. And he showed it to him. And he says, well, that's almost what I want. But see these little tiny scratches here, and see this little fading of the paint here. All these duck decoys were carved by hand in the early 1800s and hand painted. So if you found one that was in perfect condition, it's really worth a lot of money. So he said, I'm going to buy this one for $50,000, and it sold for $3 new. So his friend said, wow, he said, that's a lot of money, but I think this one's a really good buy, and I could get it for $10,000. I'm buying it. Well, when he was telling me the story, it was 10 years later. His friend that bought the duck decoy for $10,000, it had gone up to $50,000.
Wow.
So he was pretty happy.
Yeah, I bet.
But my friend that bought the one for $50,000, it was now worth over $1 million. Okay, because it was so much more rare. We'll see a Babe Ruth baseball card in here that sold for $500,000, a little piece of cardboard. So collectibles are a whole different thing. You don't just buy them and stick them into an account. You treat them with respect. You take really good care of them. But the best are mega rarities, not just things that are rare. Typically anything under 5,000 known to exist is rare, but we don't look at any collectibles, whether it's vases or crystals or coins or whatever, unless they're under 1,000. That's considered very rare by most people. We just consider it rare. Under 5,000 is scarce. But we are able to find from time to time things that are less than 300 in the world. That's a mega rarity. And we've bought many coins that were only 10 or 12 known or one of a kind.
Mm-hmm.
Most wealthy people collect something. They collect antique automobiles and then a nice looking Bentley.
Right.
And of course, antique furniture in good condition. Rare tapestries. Ming Dynasty vases. This vase is worth $1.2 million.
Wow.
And it's not perfect. Look down at the bottom. See those little chips out of it?
I see that.
And up at the top, that little spot on it, close to the rim. It's not perfect, but it sells for $1.2 million. Here's a rare painting that sold for millions of dollars. It's a Picasso. I wouldn't pay $100 for it. It's ugly.
It doesn't speak to me.
But it's a Picasso. It's very rare. Oriental rugs. Now, I own some Oriental rugs, but not the super expensive. We actually walk on ours. but they're nice. They cost me hundreds of dollars, but I just like them. Feel good on the toes. Now here's a duck decoy that's not in great condition, but it's still sold for tens of thousands of dollars.
Wow.
But regular people usually collect something. I mean, think of it. Most everybody collects something, whether it's seashells or postage stamps. Thank you. Prints. You can buy prints like this that, like a Thomas Kincaid print, sometimes for a few $100s. Okay, so you don't have to be very rich to collect. Disney keepsakes. Here's just a small sampling. There are all kinds of Disney keepsakes. I visited a couple in their house here where I live, and they put an addition onto the house that was the same size as the original house. So they went from 2,500 to 5,000 square feet because their whole house, their spare bedroom, their closets, everything was filled up with Disney memorabilia.
Oh my goodness.
And so this extra 2,500 feet, they actually put a whole Disney museum in there.
Wow.
So one of these days they'll sell their collection and make a ton of money. Baseball cards, this is that Babe Ruth card I told you about, $500,000. This is a piece of cardboard that sold, or was given away free with a 3 cent back or two ago. $500,000.
Amazing.
Comic books we mentioned. Some of these that you're looking at here are worth the tens of thousands and higher. Sports memorabilia. This is a Mickey Mantle. I know people who would pay a lot of money for that. Odd collectibles. I've seen people collect some odd things, and like old
bedpans.
But I can't imagine anybody collecting bedpans.
Me either.
But these are very rare, and obviously people threw them away years ago because they went to the plastic ones that are disposable. So now the few that are left are worth a lot of money. It's crazy. So how do people evaluate and appraise collectibles? Well, there's expert appraisers that's all they do. Look through little magnifying lenses. But there's a problem. A typical appraisal is expensive. It's time consuming. It has a limited life. And that's important. Because you can spend $5,000 to have an antique desk appraised. And if you try to sell it to me 3 years later, I'm probably going to insist on a new appraisal because something could have happened. It could have gotten scratched or whatever, something that's not visible to the naked eye. Or a $100,000 painting that was appraised 3 years ago. Maybe it's been exposed to humidity and it's damaged the painting. So you spend all this money for appraisal, but they only last for a limited time. And there's no guarantee at all. If a guy tells you, yes, this is genuine, and you find out later on it's not genuine, if you go back to him, he might, and I emphasize might, give you back the $4,000 or $5,000 you paid to get it appraised. But he is not going to make you whole on all the money you bought by paying $50,000, $100,000 based on his stupid advice. So there are a lot of different types of collectibles that are great investments. I really have never met a collectible I didn't like. Antique shotguns, you name it. But not all of them are portable. They're not all concealable. They don't have intrinsic value. They don't have lasting certifications. There's no universal grading system. Each appraiser uses a different system. They don't have certification guarantees. There's no real-time trading, and most of them are not liquid. So, portable and concealable. Rare coins. These are Jewish people fleeing Germany. They were smart enough to get out before Hitler started rounding everybody up. And he didn't let them take much of anything, just what they could carry on their backs. They had to give up their homes, their businesses, whatever. But a lot of them sewed rare coins into the lining of their clothes and were able to sneak it past the border agents. These types of collectibles, they're not so portable. A Donkey Kong game, a jukebox, even the violin. is fairly small, but it's not so portable. I can put my net worth in my pockets with rare coins. Now, when we look at intrinsic and extrinsic value, the people that trade options understand this. Intrinsic value is the in the money portion of your option. Extrinsic value is the out of the money portion, or the time value. The difference is that with options, that time value evaporates. But with intrinsic and extrinsic value in collectibles, the extrinsic value becomes worth more and more because rare things just get more rare. So there's very few that have both intrinsic and extrinsic value. Collectible coins do, diamonds, jewelry, silverware. The last two have precious metals in them. They're not as easy to determine the price on, but at least they have intrinsic value. It's not just all the extrinsic value, the rarity. But these are extrinsic only. Stamps, autographs. I came across a picture of an autograph of William Shakespeare that sold for, I think, $450,000 because there's only 6 known autographs of William Shakespeare in the world. Baseball cards, documents, books, even the Mona Lisa. The Mona Lisa's intrinsic value is $4. They say it's worth $1 billion. It'll never be sold, so we'll never know. But its intrinsic value is the wood, the stretchers, and the canvas. Maybe worth $4. So forget about extrinsic value. So if you're going to buy collectibles, you want to buy collectibles that have both types of value. I mentioned earlier that appraisals have to be redone, and usually fairly frequently, every 2 or 3 years. But evaluations like this is an extremely rare 1658 gold crown. As long as they're still sealed in this ballistic plastic container, the certification lasts forever. Okay, this side has the barcode, has all the information about it on the back side. It's got holograms and so on, so you can tell that it hasn't been tampered with. So the biggest thing about collectible coins is universally recognized certification. Throughout the world, there's only 2 things that have universally recognized certification of collectible coins and diamonds, but only coins have the certification encased with them. Remember the picture there? That's the certification, the barcode, and on the back, the hologram. With the diamond, you have the diamond in a case, and you have a piece of paper that accompanies it, okay? You can't even super glue the certification to the diamond. So it's real easy for an unethical diamond dealer to swap out a coin that looks very much like the other one, and it's worth 1/10 of the value. And he gives you the certification with it. Then you can go back and get another certifier to certify the same coin and do it again, get another certificate.
Right.
So certification guaranteed, no for appraisals, yes for coins. Numismatics don't just offer universal grading certification, but certification with meaning. If you buy any other collectible that's later determined to be counterfeit, tough luck. But both of the major grading services, PCGS and AGC, offer secure grading with a money-back guarantee, not just of what you paid to get it graded, but of the actual value of the coin. That gives people great confidence, and that's why this is one of the most popular coins in the world. Now, real-time trading. This is not true about all collectibles, but the more common ones, like the US coins, they have a real-time electronic trading system, very much like the NASDAQ. Today, there are over 100,000 bid and ask prices on the certified coin exchange, and live trading occurs every day. And they trade coins from the 2 big ones, PCGS and AGC, but also ANAX and IGG. So they're extremely liquid. Coins are the most liquid of all collectibles, with a sell rate of 99% at auction. Unless somebody puts a reserve, like a minimum price, on a coin that's really unreasonable, you never have an auction end without all the coins gone or almost all of them. Whereas auctions for paintings and furniture and all the other types of collectibles, often up to 50% of the things that were put up for auction are still sitting in the warehouse when the auction's over. So why coins are the best collectibles? I'm wrapping up here. Only coins have it all. They are portable. They are concealable. They have intrinsic value. They have lasting certification. They have universal grading. They have certification guarantees. They have real-time trading, and they're very liquid. So, one final point. The collectible coin market is the most actively traded collectibles market in the world. Over $100 million in collectible coins change hands every week. That's $5 billion every year. And by the way, that figure's 4 or 5 years old, so it could be much higher than that by now. But even that, $5 billion is a lot in collectibles. So this is something that everybody should consider. And if you're interested in looking into it, you can go to CFRNgold.com, and we'll send you what we call the Gold Education Starter Package. It's got all the information you need to know to be much more knowledgeable about gold and silver than any of the guys who call themselves financial experts that you might know. And you'll get invitations to free webinars we do every Monday night that you'll find very interesting. We talk about all different kinds of financial instruments and ways you can save money on just about everything you buy, how to teach your children and grandchildren about money.
And that's every Monday night, right?
Every Monday night at 8 o'clock Eastern Time. So, and if you want to call me, the email you get has my telephone number. It's my direct number. You can call me and ask any questions. Speaking of which, does anybody have any questions right now?
Let me check the chat box.
I had to pedal pretty fast to get this whole thing done in an hour.
You did good. That was great. I don't see any questions at the moment.
Okay.
But go to CFRNgold.com, get that starter pack, call Dr. Tom, and give some consideration to what percentage of your portfolio should be in a market that cannot be manipulated.
I agree.
Thanks so much, Dr. Tom.
It was my pleasure. God bless you and all the people who are listening.
All right, I'll talk to you later today or tomorrow.
Sounds good.
All right, thanks, Dr. Tom. Okay, so again on the S&P, we had a big drop from 33.81 down to 33.78. We dropped once, twice, and there's number 3. And the market trying to claw its way back. Where's it trying to get to? Well, let's take a look. There you go. If we can rally up to that point, then we'll look to short the market back down to this weekly trading zone in Q. Still got a ways to go to find the BBC there. Russell. Looks like we might already be there. Already climbed above it. So The Russell attempting to lead to the upside, already back above the BBC, looking to climb back to that weekly trading zone at 1697. The NQ, S&P, the Dow, so just a little bit higher on the Dow, and then we'll look for an opportunity to trade that on the short side as well. Crude, the alert last night on crude, again, the across the board message was sell the indices, buy crude, and the actual number on crude to get long was 53.95. That puts it about right. All right there. So we triggered 95, made it up to 54.09, about $140 per contract traded, back below the trigger, up to the highest weekly trading zone this week for crude. And now we've gotten back down to the trigger. And so if the indices slide into the close, we will look for gold to rally into the close. Good word for the day. Let him go. Huh? Let him go. Jonah 1:12, and he said to them, pick me up and throw me into the sea. Then the sea will become calm for you. For I know that this great tempest is because of me. It's a mistake to cling to someone when God is telling you to let him go, until you obey God. The storm you're in will keep getting worse, as in the case of Jonah. The Bible says the sea was growing more tempestuous, and Jonah said to them, pick me up and throw me into the sea. Then the sea will become calm for you. For I know this great tempest is because of me. Nevertheless, the men rowed hard to return to land, but they could not, for the sea continued to grow more tempestuous. Therefore they cried out to the Lord and said, in Jonah 1:11, we pray, O Lord, please do not let us perish for this man's life, and do not charge us with innocent blood. For you, O Lord, have done as it pleased you. And we know what happened then. They picked up Jonah and threw him into the sea, and the sea calmed down. God has a plan for the Jonahs that you're dealing with in your life. And it may require them to hit the bottom before they rise again. And as long as you keep trying to rescue them, God's plan is being thwarted and delayed. Jonah's problem wasn't that he didn't love God. It was that he didn't want to do God's will. So God resorted to extreme measures to get his attention, push him towards his destiny, and save the city of Nineveh. You have no idea what God has in mind for the person he's asking you to let go of. If they are his redeemed children, he wants to prosper them. See Jeremiah 29:11 for that. That's why he wants to save them. And that's why you need to let him go. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.